Hey everyone, welcome. And today we're going to talk about should you lock or float your interest rate. As you go through the home loan process, these might be some questions that arise. So, would you lock or float? And that is a question that largely depends on your risk tolerance, market conditions. So, if you want stability and are concerned about rising rates, you should lock the rate at application. But if you think rates are likely to fall soon and you're comfortable with volatility, then maybe float your rate. But keep in mind, a rate quote is not a rate lock. And just because you've gotten a rate quote doesn't mean it's locked. So, we're going to talk really briefly about understanding mortgage rates and how they fluctuate. First of all, when people talk about the Fed and interest rates, a lot of times they think that the Fed influences mortgage rates, but they don't. They do not set mortgage rates. They set the federal funds rate, which is the interest rate that banks charge between each other. And the federal funds rate affects things like credit cards, auto loans, student loans, and HELOCs. Mortgage rates are influenced by elements like inflation, job creation, and whether the economy is growing or shrinking. And as you can see from this chart, Fed fund rate has gone up and down depending upon what's going on with the economy. And if you can see in 19, all of these rate cuts, all through 21, all these hikes, and our recent rate cuts in 2024. Now, if we look at mortgage rates over time, you can see they've been tracking this since the 70s. And this chart shows you rates that have gone in the 7 percentile range to the 18% range in the 80s, and then where we are today in the 6% range. The other thing to notate on this chart is that every time you see one of these gray columns, that is when we've had a recession. And traditionally, after a recession, mortgage rates declined, as you can see through this chart. Now, we're not in a recession at the moment, but I know that interest rates have come down recently, and they're forecasted to come down more in 2025. So, why and when do rates change then? The price of mortgage backed securities is the only thing that moves interest rates. So, a mortgage backed security is a type of asset backed security that is securitized by a mortgage. Mortgages are sold to government agencies like Fannie Mae or Freddie Mac, and they securitize and package these loans so it can be sold to investors. So, fancy language is that mortgage rates have an inverse relationship to bond prices. And so if you can see in this chart here, this is charting mortgage-backed securities. And I watch this all the time. And as mortgage-backed securities increase, interest rates come down and vice versa. Now here's a rate stack. And the reason I want to show you this is that oftentimes when you're online or when people talk about rates, the lowest rate comes with the biggest cost. So in this particular rate stack, you can see this person here. If they wanted to get a 6.25 mortgage, it would cost them about $7,000. And if they wanted a mortgage at 4.25, it would cost them $34,000. And the cost of that, again, is based upon things that we call loan level pricing adjustments. And there's a bunch of them that affect interest rates. And most of the time, interest rates are based upon risk. So here is an example of factors that affect interest rates. So when someone says, what's your rate? It depends largely on a loan amount, the type of loan, the purpose, the loan to value, the state, the county, the type of property, the occupancy, your credit score, your assets, your income, if there's concessions, the lock period, whether there's mortgage insurance or not, or escrows. All of these things affect interest rates. And then these are some things you need to ask yourself too. What do I need to lock my rate? Well, you just ask your lender to lock the rate. More times than not, your lender will ask you these questions in advance or while you're doing your application, depending upon what's happening with the market. Next, you want to ask, is there a fee to lock my rate? No, there is not. I don't know any lenders that charge a fee for this. So that's not something you need to worry about, unless there is one caveat to that. you are locking beyond the normal lock periods, and this is what we call an extended lock, then there may be a fee for that. So if you're locking for 6 months or a year, yes, there is a fee for that. How long is your rate locked? Most of the times when you chat with a lender and you're doing your application, they're going to talk to you about your escrow period, how long of a time frame you might need for this. And these time frames can come in 15 days, 30 days, 45 days, 60 days, 90 days, and beyond. That's kind of the normal. And so when you do your application and go into contract, most lenders are going to lock your interest rate for 30 days. That's kind of typical. But there are variations because a home loan is unique, just like you and I. So now people go, what if the rate goes down before I close? Well, we have something called a float down option. So with a locked rate, you're protected, right, against rate increases. And if you add this float down option, it allows you to take advantage if rates drop during your locked period. It allows you to hedge against higher rates and take advantage of lower rates. However, this does come at a fee, and it does depend on the lender what that fee is. And most lenders are not going to advise you when rates rise and fall. So it's up to you to contact the lender if you want to exercise your float down option. And not all programs allow for a float down option, but this is a conversation you need to have with your lender. Next, how familiar are you with the term points? Discount points, they're the same terminology. What that means is that based upon this example is if the market rate in this example is at 4.5, there's no cost for that rate. But if you think you want to pay to buy down that interest rate, you can. You can buy it as low as you want. Remember that rate stack? You can pay the money. Now, as you can see, your payment will decrease, but your cash to close will increase because you are paying points. A point is a percentage of the amount that you borrow, and you're adding that to your closing costs. Now, I advise you to check with your lender to make sure it makes sense to buy points, and also to check your closing estimate and make sure that if they're charging you points or not, because there's a lot of times lenders try to sneak that in there and you're not even aware that it's on the closing estimate. Now, where are rates headed, right? Here's a chart we're in 2024 at the moment, and Fannie Mae and MBA and NAR all predict interest rates in 2025 to go down. So right now we're in 6.5 range, we'll call it, and they're all thinking that in 2025 rates are going to go between 5.5 and 6. Of course, as we've just discussed, rates are based upon a lot of things. So we got to wait and see what happens with inflation and the economy and the job market to see where rates are going to go in 2025. We will always do a personalized total cost analysis for you that shows you a variety of options with your purchase price and down payment, with points, without points, to make sure that you're making a good decision based upon your goals and that we've gone over all of your options, because this is the biggest decision that you're going to make, and we want to make sure that you're informed and have the information to make good decisions. Some things to keep in mind: always consult a mortgage professional. There are good ones and they're not so good ones. So you're always going to want to discuss your situation with the lender because it's a personalized situation and your situation is unique, just like you and I, and one loan does not fit all. The next is chat with them and see if the float down option's available and right for you. Again, it may not be available for the program that you want, and it may be too cost prohibitive for what you're trying to accomplish. And lastly, evaluate your risk tolerance, right? If we're talking about locking or floating, you have to be honest with yourself and be comfortable with volatility. Most of the times, if you have a mortgage advisor, they're going to advise you which route to go and do what is best interest for you to protect you if it's a volatile market, or tell you to float if it's not a volatile market. Now, how I can save you money is that I've been doing this for 27 years and I follow the market every day. I get real-time market alerts. I get regular updates. I watch the market all the time. Rates can change frequently throughout the day, and we might get an alert to lock. And if your lender's not paying attention, you might miss it, and the rate you were quoted is gone, and the next day the rate's higher. We want to make sure that that never happens to you. So we are going to put you on our rate lock program and monitor your rate. More times than not, we're going to lock it. And if we can float it down before closing, we're going to take that option if it's available. I can't wait to help you on this home buying journey. If you have any questions, please reach out.